Hello everyone, and welcome back to this edition of the weekly video market update, and I hope that you guys are staying safe amid rising COVID cases across the board once again. And I hope that you also guys enjoyed our signals that we sent out over the past few days and during last week's trading. In today's video, we have a lot to cover as we wait for many key events throughout the upcoming session. So let's kick off this video, as always, with the topics that we will be covering today. The US dollar keeps pushing higher, reaching the highest level since July of last year. Is it the right time for a pullback? Gold and silver tumbles amid rising USD. Is this the change of a bullish trend or an opportunity to buy again? All eyes are headed toward the US today as we wait for the core PCE price index, GDP data, and the FOMC meeting minutes. And finally, fears of COVID-19 returns after Austria's lockdown announcement and rising cases across the board. Will this change the central bank's policies? We'll dive into the details after a short commercial break. Beginning with the US dollar index this time. The index keeps pushing higher and higher with no significant or a notable retracement to the downside, posting the highest daily close since July of last year around 96.55, which is another resistance area on the daily chart. But looking from a technical point of view, at least, the technical indicators on the daily chart, we can see that the RSI indicator is now trading above the 70 area, which is also means that the index is now heavily overbought. But does it mean that the index will start retracing from the current levels? Not exactly, but this also possible. Yet such a move should not come as a surprise to you guys, as we mentioned multiple times over the past few weeks and the past few months that the US dollar bullish trend will be the strongest among other currencies. And here I would like to remind you with the following chart. This chart was published on our social media and my own Twitter account. And this was back in June of 2021, this year, when the Federal Reserve dropped the first hint of a possible tapering before the end of the year. This was the statement of the Federal Reserve back in June of this year. Since then, the US dollar began its upside momentum gradually, and it did accelerate since mid-November when the Federal Reserve also started the tapering process. This is what I call the beauty of reading the history and the previous scenarios and post them on the chart. And I tried to find some similarities. And this is exactly what happened, or exactly the same as what happened after the financial crisis back in 2008, 2009, when the Federal Reserve in 2014 started to hint for a possible tapering, and since then the US dollar started to curling up all the way until the first rate hike, that the Federal Reserve did back in 2015. However, this is, again, as I said, this is the same thing. Therefore, any downside retracement now in the US dollar index over the coming days, over the coming weeks, or even for the coming months is likely to be limited and likely to continue be as an opportunity to buy again, at least until the end of the QE tapering, which might actually happen before June if the Federal Reserve decided to accelerate the tapering based on the what we see right now from inflation and the economic data. Moving from the US dollar to metals now, including gold and silver, of course, which declined sharply over the past few days on rising US dollar. We did send out a signal last week to short gold at 1866 and 1868, but unfortunately we had to close these trades way too soon. around 848, which was the target. And this is, as we mentioned, on our Telegram or FBS English Telegram. But I can't really complain about this trade. It is still a green trade after all, and this is what matters the most. In the meantime, gold declined back to retest its daily moving averages, including the 50, the 100, and the 200-day moving average on the daily chart as shown here. While the daily trend line is now trading around 1784, and it did test that trend line over the past few hours, and it was able to kind of bounce off that support. But this current decline, in my opinion, is considered as another or new opportunity, not only on the short term, but also on the medium term as well. Therefore, we sent out also a signal to our clients through our private written reports to buy gold at certain levels. Of course, I will not be able to tell you the levels, but if you need more details about this, if you need more details about the signal, you have to be a client with an active account with FBS. Moving to silver now. The same thing applies to silver. However, I would currently prefer silver more than gold, especially on the longer term. In my opinion, I see silver might be way undervalued amid rising inflation and shortage of supply, and at the same time, it is hard to believe that gold made it all the way above $2,000 and silver still trading within the $20 areas. But I believe that the current downside move is another opportunity to build a medium-term position as it keeps holding above the above the $22 or $20 an ounce over the next few weeks. And I will for sure send you the details whenever I decide to enter that trade. Let's head back to the US now, as we have a long day ahead of us. All eyes are headed toward the US Core PCE Price Index and the GDP data, in addition to the FOMC meeting minutes later this evening. The Core PCE Price Index is expected to rise further to 4.1%, which would be more than double the Fed's target, which is around like 2%, which is also gives the market more reasons or reasons to estimate a sooner than expected rate hike by the Federal Reserve, and not only faster tapering. And if so, the US dollar may soar on such news, but this time it might be side by side with metals, while equities may suffer ahead of the FOMC meeting minutes, which may hold new information about the Federal Reserve plan for a faster tapering. This is why today's trading will be very tricky and full of volatility, especially if the numbers comes with higher surprise. Therefore, during today's trading, you are all advised to minimize your risk and make sure to keep your risk tight and wait for the trade to come to you. And as I always say, do not chase the moves. Finally, let's talk a little bit about COVID-19 developments over the past few days. We saw a lot of disturbing news, unfortunately, in Asia, in Europe, including the lockdown or the full lockdown in Austria, and the rising cases in Germany and some other countries. This has led to another wave of sell-off in Europe, and somehow in Asia also today. We saw some notable decline. We have so far Nikkei is down by almost 2%. But it looks like that the vaccine might not be working as we hoped that it will be. But at least we do our part and get vaccinated, and so on. For the markets, will this change the course or the end of the bullish trend anytime soon? In short, or the short answer is only time will actually tell. Yes, cases are rising and the death rate is also rising, and this is what matters to the markets. And if this keeps on going, central banks will try as much as possible to hold their grounds and stay patient as another lockdown is looming in many countries. But at the same time, with the shortage of supply, in addition to the possible lockdown, inflation has no way to go but to continue rising, while growth might suffer another hit. Yet, at the same time here, this would be the last thing that central banks needs, as this will lead to what's so-called stagflation, which is the worst thing to deal with. But central banks also will always try to control inflation, even if this means the economy would or might slide back into recession. which in return will have a notable effect on equities and on overall markets. But this is when we, as traders, needs to read and research about possible scenarios in the next few weeks and try to manage our risk going forward. But we hope this doesn't happen, but at least it is good to be ready for any negative turns. With that being said, I would like to stress again, not to overtrade. Don't chase moves just because of this stock or this currency or this commodity is just trying to go up and you're trying to chase the move or try to catch a piece of the pie. Always try to wait for the right levels to enter, just like what we did over the past week, over the past few days in trading. We traded the euro, we traded the British pound, the Canadian dollar, we traded the Australian dollar, and even gold. This is it for this weekly video market update. I hope that you guys enjoyed it, and I hope that you guys stay safe. You can always follow us on our social media sites, Twitter, Facebook, and YouTube to get the latest economic releases, reports, and analysis. I will see you again next time. Have a good day ahead.